Let's take a look at various oil stocks. Of course, with the conflict in Iran ongoing, oil has been quite a strong performer in recent times. So let's take a look at all the various US oil stocks and see which one might be the best or have the most upside potential going forward. So let's start with the biggest, and it is ExxonMobil, of course. Now, it seems to me that we've been trading in a sort of parallel channel and now have broken out from that parallel channel. So that is a very strong sign. There's not really any easy way to predict where a top may be on this particular stock, but it is certainly the case that it is well established now in the trend, although this could go on for quite some time. If we do take a look at the indicator here, you can see that the regime flip did happen in September or so, and then you of course had the Maduro situation and all the rest of it, which eventually did push up the price for ExxonMobil. A little bit difficult to say exactly how high the stock can go, but really in some way the sky is the limit. If we take a look at the ExxonMobil over SPY chart, we might draw in a parallel channel something like this, in which case you could in theory be looking at quite incredible outperformance coming for the stock. Of course, the previous high that you had was around the time of the previous financial crisis when oil had a big run up. Oil stocks do tend to perform very well, before recessions as oil spikes, and this could be a further outperformance over the S&P of 260% potentially on ExxonMobil. So if you look at it in terms of relative valuation, we're still very much undervalued in some way for this particular stock. Looks like a strong chart, a strong buy, has broken out as we've said, and yeah, not a bad one, and certainly the biggest. A lot of people are going to be buying the biggest oil stock, aren't they? Next we have Chevron. Now, this is a similar story, another super major oil producer, and also a little bit of a different structure here. We are trading in a parallel channel already. Now, the upside on this particular parallel channel, if you were to get to the top, would be around 23% on Chevron. Now, of course, there's nothing saying you can't break above that and go even higher, or perhaps as time goes on, the parallel channel target goes up and you can have a bit of a higher price target as well. So that's how the chart's looking there. On the daily, this is how it looks. And again, we've entered a bullish regime in a similar sort of time, a little bit sooner than with ExxonMobil, although you did have a little bit of a potential flip-flop here. So quite a good look, certainly a very similar story though with ExxonMobil, I would say. And again, if we were to draw in a parallel channel on the relative valuation chart compared to SPY, you could in theory have some quite significant upside going forward on Chevron as well. Similar to ExxonMobil, that could be again as much as 180%. So to me, it looks a little bit like ExxonMobil is probably a better bet if you're looking at the two super majors. Now, of course, this isn't taking fundamentals into account, but I would imagine ExxonMobil has a bit more upside possibility than Chevron. Although, of course, if you break through the top of the parallel channel that Chevron is trading in, then you could still have some very nice upside on this particular stock. Okay, next up we have COP. This is a stock that I personally have in the portfolio currently, and I think it's reasonable to draw in a very large parallel channel here on the monthly. Now, if we zoom in on the daily, then we were trading in a smaller parallel channel, have broken out decisively from there. And I would imagine you're going to try to test the top of the parallel channel up here around $142 or so. If you are able to break through that, then there's really no telling how high the stock could go. Not sure that that has to be the base case right now, but of course the indicator looks very good on COP, and that's why it's in my portfolio. We've had a buy signal and a regime flip much later in January compared to late 2025 on ExxonMobil and Chevron. So a little bit of a laggard in some way, COP. Probably the case that people are buying the smaller companies a bit later than they are the larger oil producers, since the larger ones are a bit safer, a bit of a safer bet, generally speaking. But we could see some really nice outperformance here, particularly if you are able to break this particular level around $142. If we take a look at the chart versus SPY, it's again similar to the other oil stocks. We hit the bottom of the range in 2020, didn't quite get back down there, but if you are expecting to get maybe up to even the midpoint of this parallel channel, that would be a 70% gain over the S&P from these levels, and could be going as high as even 200% gain. So still, perhaps ExxonMobil could still be a better bet in some way than COP, but there is quite some significant upside still on this particular stock. If we now take a look at Oxy, quite an interesting parallel channel actually going on here From what I can understand, you have traded to the bottom of it in 2020. Now, interestingly, this parallel channel will not be playing out again to the downside because the lower part of the parallel channel would be going below $0. So that to me is a bit of a bullish sign, actually, and it says that this pattern is going to be invalidated. Now, I would expect the pattern to therefore be invalidated to the upside and for Oxy to actually break through this sort of $64, $65 level and maybe even reach new highs from that point. You can imagine on the monthly, that would be quite a powerful change of structure, and potentially you could see prices going a lot higher. If we again are coming into the daily, you had a similar parallel channel to with COP. It managed to break out from it quite powerfully. Will you come back to retest it? Maybe, quite possible. But I would imagine if there is a prolonged bull market for oil stocks, then you might actually break through this powerful trend line around $65 on Oxy. And again, looking at Oxy, versus the SPY, you've got this massive parallel channel in play potentially. If you were to get back up to levels seen in 2011, that could be really huge outperformance versus the S&P, 800% or so. I don't know if that's likely to happen. Perhaps we won't get as high as that, but there is the potential for quite some outperformance on this particular name, I think. A bit more of a risky pick, perhaps, because it's a bit smaller market cap, but this is a fan favorite, a favorite of Warren Buffett's, so could be a good pick, potentially. That's why I'm personally in Oxy myself. Next up, we have EOG, another large cap producer of oil, and it looks to me like you've been trading in this parallel channel recently, potentially now breaking above, and that could be quite a good bullish sign for the stock. If we take a look at the indicator, it's also put in a buy signal similar to Oxy and COP. I didn't show you it on Oxy, but I can do that now. It does look pretty good in terms of bullish regime flip, buy signal, and you're sort of off to the races at that point. So perhaps we will come down, retest these sort of levels, see if this particular breakout can hold, and you can get some upside going on EOG. And again, analyzing the EOG over SPY chart, perhaps a little bit less potential upside here. That being said, actually, this is still a 200% or so move. If you were to reclaim the top of the parallel channel and head back up there, then yeah, could be quite strong. Of course, we're basically trading in this, for all of the oil stocks, we're trading in these sort of low relative valuations compared to the S&P for the most part. So if there were to be an oil bull market going forward, then perhaps you could see the oil stocks revisit those higher levels on their relative valuations, which would be very, very promising. And yeah, some serious outperformance again on EOG, around 200% versus the S&P potentially. Of course, if you are to get up to the top of these parallel channels, that can take a long time to play out, might be over the course of several years, not going to happen immediately. And in fact, you had a bull run from 2020 to 2022, but you didn't even get up all the way to the top of the parallel channel. So just keep that in mind. It's not necessarily the case that you get back up there very quickly. It might take a long time to play out. Next up, we have FANG. This is Diamondback Energy, another producer, similar market cap to Oxy, and again in a big parallel channel. Here, we can say that the top of the parallel channel would be a further upside of 24%, downside of around 32% right now, judging on the monthly. And if we look at the daily, once again, you have flipped into a bullish regime. No buy signal, but that's okay. All the other stocks, all the other oil stocks pretty much are getting those buy signals, so perhaps some serious outperformance going to be coming here for this particular stock. Now, this particular chart, the FANG over SPY, is not necessarily as promising compared to the other stocks we've talked about. Only a 70% outperformance to get to the top of the parallel channel. So perhaps this one is not as exciting of a name compared to some of the other stocks. If those stocks were able to perform as they have historically done and go, back up to the top of the parallel channels, then could be quite some powerful outperformance compared to this stock, a bit newer, and perhaps not quite had that bull market previously that the others had to get to those insane levels. But yeah, still some pretty sturdy outperformance potentially here, although of course you're quite far off the lows already on FANG. And the last of the producers I've got here is Matador, MTDR. Very small market cap, only 7 billion, so you imagine going to be a much more volatile name compared to the other oil stocks. And again, a longer time frame parallel channel that we did break down from, but have now reclaimed, so that is definitely a very bullish sign. Getting to the top of this parallel channel would be a 77% move, so could be quite some serious gains to be had in a relatively short amount of time on this particular name. And in terms of on the daily, we have broken out from this parallel channel. You can see here we may use that as support in the future, but that is a bullish sign if you can hold these sort of levels and go higher. And again, another stock that has put in a buy signal. So to me, this looks like one that could actually be quite an outperformer, along with, Oxy, for example. And again, having the buy signal as you've had with COP and EOG is usually a pretty good sign as well to get some serious outperformance going forward. And this is once again how MTDR over SPY is looking. Haven't quite reached the lows, and you are potentially getting an 150% outperformance there versus the S&P. The downside of around 50% relative underperformance is still potentially there because you haven't quite tagged the bottom of the trend line. So a bit more risky. This particular name, of course, you imagine it would be since it's a smaller market cap stock. But yeah, another interesting chart to see here. And now we're going into the midstream companies that are sort of dealing with the pipelines and the infrastructure for the oil, not necessarily producing it themselves. We have here EPD, Enterprise Products Partners, in a very robust, strong upwards parallel channel here with further upside potentially of around 14% to the top there. Downside of around 14 as well. So kind of at the midpoint now, potentially a decent option here. Taking a look once again at the daily, you're in a bullish regime. No buy signal, but yeah, looks pretty sturdy, pretty robust for the moment, I would say. This particular relative valuation chart is quite an interesting one. We can draw in another parallel channel here, why not? Looks to me like you may have just wicked below these sort of levels and now potentially heading back up. That would be a massive move. I don't know if you're going to get as much as a 290% move, but if we do enter again this prolonged oil bull market, then in theory this is possible on a stock like EPD. But again, all these relative valuation charts are looking like the risk reward for the oil stocks is still very much heavily skewed in favor of such stocks compared to buying the S&P or something like this. So I could imagine, if the S&P has some troubles, some underperformance, maybe goes down 15, 20%, whatever, while these oil stocks are performing well, that can quite rapidly, expand or collapse these kind of relative valuation charts. So another very interesting chart here, EPD. We've got another midstream infrastructure play here on the oil, KMI. Kinder Morgan, 70 billion market cap, and now reaching the top of the parallel channel. Will it break down from here? Possibly. You do have a downside of around 36%, let's call it. Of course, if you do break above, then you may be going as high as the previous high, which would be some 30%, or even, you may even go beyond that, potentially. And this one in a bull trend for quite some time, you had a sell signal that was completely false. Stock went higher, so that's interesting, but no buy signal. So this one's a bit more entrenched in its trend. And to be honest, I wouldn't be surprised if you do reject here from these sort of levels and head a bit lower, maybe consolidate, go back down to the midpoint and then go higher. Something like this could be possible. You've come up quite a long way, tagged the top. You haven't headed back down yet to the parallel channel's bottom. So perhaps this stock is not looking like the best buy at the moment, I would say, but let's take a look at the relative valuation chart here. If I just put it on the monthly, we can see a bit more clearly what's going on. This is a bit of an ugly valuation chart here, I would say. You're just now in this sort of parallel channel. I would say getting back up to previous levels will be a tall order. And now, of course, if we are rejecting from the sort of levels that we're at on the regular chart, then you could in fact see this ratio go down. From here, I wouldn't be too surprised. Of course, a breakout is always possible. If you got a breakout on both charts, then you might be seeing some higher levels, but I wouldn't be confident calling where this one will go. Maybe 50% outperformance or something if you do break out. But yeah, not a name I would be super excited to buy looking at these charts. And we have another one here, WMB, Williams Companies, another infrastructure play. It looks to me like this is the parallel channel that is in play, and perhaps we have just tagged the top of this on the monthly, which is quite a powerful target to be hitting. Potential downside is pretty huge right now, 54% or so. So this is a bit of a dangerous one. Perhaps the oil infrastructure plays have run up a little bit earlier and faster than the oil stocks in general. There's been sort of a bull run here since 2023, in fact, whereas oil has been languishing, while these sort of stocks haven't been in so much trouble. So they might be a bit more developed in their trend already and therefore need to come down. Here, for example, another sell signal, false sell signal similar to KMI, so I would expect some rollover coming at some point. And yeah, maybe you are going to come back either to the midpoint, minus 26%, or even further down. And now we have a couple of refiners here. For example, we've got MPC, Marathon Petroleum. In a bullish trend, you had a sell signal here and a bit of a sell-off, but no buy signals in the same way that you had on the oil stocks. And potentially this parallel channel could signal that, again, on these particular refiner stocks, you might actually be going down. Here, 20% or so potential downside. Not sure about that. You might, in fact, just get a breakout. Let's take a look at the S&P relative valuation. And to me, guys, this is looking a little bit ugly. Like, you're already getting towards the top of the relative valuation of MPC over SPY. So to me, it seems like basically the oil stocks are the ones that are set to benefit most from the current situation compared to the rest. The midstream and refining stocks have likely already experienced a lot of their up move. I can look at the charts and I can say that this probably only has 20% more outperformance before you're going to get slammed. And that's if you even get up to the top of the parallel channel here. It's quite possible you won't be able to make it. And in fact, we'll just head up to this sort of level here. And of course, quite some downside potential compared to the S&P on this particular name. And finally, we have one more refiner. This is PSX. Quite a powerful long-term uptrend, but again, we're quite near the top of that. Another 13% upside in theory possible, but the downside is much more pronounced here of around 40%. So this to me looks, again, interestingly, a lot of false sell signals on these refiners and infrastructure plays. But yeah, quite established in the trend already. Could come up a little bit more. This doesn't look too bad compared to MPC and some of the other infrastructure plays. Might still be some upside on this particular name. Let's take a look at the relative valuation chart versus the S&P. Not looking too bad. Potential outperformance of maybe 70%. But again, seems a lot better to be in the oil stocks compared to these kind of infrastructure refining names. It looks to me like there's a lot more risk and not so much reward on these kind of stocks. So I hope that's helpful. I think in summary, ExxonMobil looks pretty good. I'd probably avoid Chevron. That wasn't looking that great comparatively, although still pretty good upside. If you were going to try to play oil, you probably want some kind of diversified portfolio, maybe, some of the big names, maybe some COP, some Oxy, although they, if they do reject from these levels, then you might be in a little bit of trouble for those stocks. EOG could be a good one breaking out, and then maybe Matador if you are seeking that more risk, more reward, low cap kind of stock. So I hope that is helpful in some way for you, giving you a bit of perspective on what we might see for the oil stocks going forward. I think there will be a bull market for oil stocks for quite some time, just due to the amount of supply constraints that are occurring in the Middle East at the moment. I don't expect that will stop anytime soon, and it should be bullish for oil stocks. But we'll see. I might be wrong about that, and I might be the case that these stocks need to wait quite some time to reach the highs on their relative valuation charts, for example. But regardless, thank you very much for watching, guys. Subscribe as always for more daily videos, and I'll see you next time. Good luck out there, and bye-bye.